Eli, welcome.
Thank you.
Otara, welcome.
Thank you, Kigondo. Good evening, everybody.
Julius, welcome.
Thank you.
So we are giving participants about 2 more minutes and then we can get started. We already have a good number. So 2 more minutes. Call your friends, tell a friend to tell a friend.
Sorry, Dr. How are you?
Yeah, we'll start in 1 minute, Julius. So people are joining in.
Yeah. I believe this is Dr. Simon Kigondo.
Yes. Dr. Kigondo.
Oh, this is how you look like in life, okay?
I don't look as bad as I talk, so that's...
No, there's no problem. I've also decided to put on video just briefly.
Very good.
So that I'm not sure if I'm visible. Yeah, there you are. So just for us to be able to know who we are, my colleague Susan is already on board, and Franklin.
So Julius, we have already done that. The participants are on board. So I think I'll give you an opportunity to introduce them in the next 1 minute. Huh?
Thank you very much. Appreciate it.
You're welcome. So generally we keep to time. So without much further ado, I want to welcome everyone to this Kenya Medical Association and Kenya Revenue Authority Stroke Service webinar. The webinar is educating doctors on the tax, on the how to do tax and things like that. So without much further ado, I would like to introduce Dr. Eli Nyaim, who is the convener of the KMA committee on medical legal to take over the session. But before that, I would want to introduce the members of the Kenya Medical Association National Executive Committee on the call. We are waiting for our president, Dr. Were, to join. And on the call, we have the Vice President, Dr. Amos Otara. Dr. Amos Otara, say hi.
Good evening.
Thank you very much, Dr. Amos Otara. We have Dr. Diana Marion, who is the Assistant Secretary General. Dr. Diana, say hi.
Good evening.
Thank you. And Dr. Eli Nyaim is the convener of the Medical Legal Committee, who is in charge of this webinar. Dr. Nyaim.
Good evening to you all. I'll put on my video briefly so that you can see how I look like, relaxed in my sofa in the sitting room.
Thank you very much, Dr. Nyaim. I'll hand over to Julius Yeager. Sorry, I've baptized you, Doctor, who is head of, you'll tell us who you are, Julius Yeager from the Kenya Revenue Authority, to introduce his team. Julius.
Thank you very much, Dr. Simon. Highly appreciated. Allow me to confirm that as Kenya Revenue Authority, we are very, very delighted to be with you this evening. And Dr. Eri, you are almost right. It's only that I missed it by inches. I would have been one of the doctors from the Nakuru High School. So many of the doctors there were my former classmates. And I'm happy to meet the doctors now in real life after so many years. Now, I'm the head of taxpayer services at Kenya Revenue Authority, where I've been for the last 26 years, so to speak. And we are really, really excited that today we are having an opportunity to address the doctors. Doctors, please feel very much welcome. And we want to take this opportunity to say that a few minutes ago, I was in a meeting with the Commissioner of Domestic Taxes, Madam Rispa Simiyu, who has actually asked me to pass her greetings to you. And I believe to an extent, the entire Kenya Revenue Authority management are excited to be able to host medical doctors in our country. We appreciate highly the role you play in the development of our country, the services that you offer to our citizens. And we want to confirm to you this evening that based on your services that you offer, we are able to have what I would call a healthy nation, and hence a working force that is able to contribute to the taxes of Kenya. Now, in this evening webinar, I'm with my colleagues, Madam Susan Njeru, who is the manager in charge of micro, small, and medium enterprises. And later on, you'll be able to see how doctors could fit into that category. Most of those doctors who are having their own businesses that they are running within the country. At the same time, I'm also joined by one of the team members, Mr. Franklin Kimutai, also from Kenya Revenue Authority. So we are really excited to be with you this evening so that all the issues that you've been raising, all issues that you'd want to know are answered. So allow me, without taking much time, to have Susan Njeru just say hi briefly, and Kimutai saying hi, then I give an overview, then we progress it. Thank you. Madam Susan Njeru, if you're in the house, thank you.
I am in. Thank you very much, Julius Yeager. We appreciate that you are able to join us. As Mr. Yeager has said, I'm Susan Njeru. I work in the Stakeholder Engagement Unit of the Taxpayer Services Division. And this is an opportunity for us not just to be able to share knowledge with, with our fellow doctor, with the doctors, but also an opportunity for us to get feedback regarding not just tax administration matters, but also tax law matters. And so we look forward to engagement such as this, because we actually do benefit just as much, if not more than the stakeholders do. So we are grateful for the opportunity.
Thank you very much, Susan. Allow me at this point in time to invite Franklin. Are you there? Franklin, say a few words, then we progress.
Hi, good evening.
Good evening, Franklin.
This is Franklin. Like Ambosa said, I work with KRA Stakeholder Engagement, and I'm happy to be part of this engagement tonight. I look forward to at least responding to taxpayer questions. Now, we call you taxpayers from our side. You need to know that as doctors. So I'm looking forward to having an engagement with you, a fruitful one. At the end of it, we would have at least responded to one or two of the queries that you have as a doctor, individually or as a group. So thank you.
Thank you very much. Thank you, Franklin, and thank you, Madam Susan. I want us to go very fast. I would want to give an overview of why this meeting today. Dr. Kigondu, unless you wanted me to give it back to you, but if you allow me, I just give an overview of why we have this meeting. Thank you very much. To the doctors in the house, and I'm very happy that the number is at 305. That is excellent. That is quite encouraging. Allow me to take this opportunity to say that Kenya Revenue Authority is your partner in the kind of development that you do. Everything that you do, everything that you work on, as Kenya Revenue Authority, we expect you to be able to be part and parcel of the Kenyan citizens who are willingly paying their taxes. So the most important thing is about voluntary tax payment. We need to all appreciate that we are in an era where we talk about self-assessment, and self-assessment simply means it is you to declare exactly your income, how you make it, and where need be. If there are certain aspects that is not very clear to you, Kenya Revenue Authority is here to explain to you all those aspects that may be impacting on your business, impacting on your work, and that should not at any time be able to put you down because you do not have an answer. We are here to engage you, and we are here to let you know that our engagement with the doctors is free of service. No charges. There's no charge that will come from Kenya Revenue Authority to a doctor in terms of being given capacity to understand their role. That is very important. But on the onset, allow me to say a few things about this, because it's very, very important for the doctors in the house to understand where we are coming from. The most important to the doctors is that a doctor is a taxpayer. And a taxpayer has got 4 major obligations and responsibilities that he needs to do, or she needs to do, when it comes to tax payment. The first and most important thing is about taxpayer registration, that a taxpayer must register. That's the first and most important thing. So if you're a doctor in the house, and we expect you to be a registered taxpayer. Once you've done that, you have a PIN, that is a personal identification number. The next thing that you must always do as a doctor after registration, you having a PIN, is to ensure that you file the returns. That is tax declaration. You must declare your taxes. So I've said the first one is about registration, and I've said the second one is about tax declaration, or what we normally refer to as the filing of the returns. Now, once you've done this as the second aspect, then the third one, which is also very important, is that you are expected to make payments. Yeah, that is important. So you doing it yourself, or somebody is doing it on your behalf, you must be able to ask that person who is assisting you that first, are we registered? Is our business registered? You could be having something like whatever clinic and sons and whatever it is that you have. But the most important thing from us, Kenya Revenue Authority, is to ask you and to confirm from you that are you registered as a taxpayer? Secondly, are you filing your returns? All right. And thirdly, are you making payments? And the fourth one is that you should be giving us what I would call accurate information. The information must be very, very accurate. You should be able to let us know how can we contact you just in case there's a problem. Whatever there's some direction you'd want to make, and what we talk about amendment of the return that you have filed. If you need to make any amendment, you are supposed to do that and to do all that. So from the onset, I want to believe that as we are talking now, doctors in the house who are now at 341, you are aware that for you to be engaged in any business with Kenya Revenue Authority, those 4 items are very, very important for you. And the second thing that I wanted to talk about as an overview is that we have mentioned to you that let nobody come to you and tell you that KRA says this and that. In other words, integrity is most critical to us as Kenya Revenue Authority. The service that we are offering this time is free. Even when we visit you and we talk to you, please, no one should cheat you that I'm from KRA, harassing you or anything like that. That is not KRA standard. So integrity is paramount to us. And we want to appeal to you to be our whistleblowers, just in case there are people who are fake who come on board and talk to you about things which are not according to KRA, please let us know. So we have reporting areas where you can report all any issues and things that may not be pleasant to you as a doctor when it comes to KRA matters. Please feel welcome and ensure that that is reported. Now, without much ado, doctors in the house, you know your time is very critical. Allow me to ask my colleague, Susan, to present you a presentation so that now when we're talking going forward, you will be able to raise questions from a point of knowledge. Okay, Hernandez, thank you so much for being on board. We are really humbled that you managed to raise this number that we are talking to. This to share the presentation. Dr. Simon Kigondu, if there's no much ado, you can allow me to go back to my team, or just in case you want us to come back to you before we progress, also let us know. Thank you, Dr. Kigondu.
So thank you very much. I would like to recognize the presence of our president, Dr. Were Onyino. I think I would like him to say a word. Dr. Were. Okay, he may be having network challenges, but he'll be speaking later on. I think we can proceed to Susan.
Okay, I think I can share my screen and then we can be able to proceed. Just give me a minute. Is my screen visible? Maybe you can confirm to me whether you're able to see it. And
yeah, we are able to see your screen. We're able to see your screen from my end here. I hope the doctors as well seeing it.
Continue, it's visible.
All right, so I think we can start. I think Mr. Yeager has covered what the key points regarding the obligations that we have as taxpayers, and now we can delve into the flesh of the sensitization. So we will begin with let me see. I think okay. I don't know if I'm able to move it. Okay, perfect. So we will just begin with a disclaimer. Of course, as KRA, we endeavor to always bring you the most accurate and up-to-date information, but it is still important for us to mention that if we do have any information that is contained in our presentation that is contrary to any of the provisions of the tax laws, then the tax laws shall prevail. And that is an important disclosure for us to make just moving forward. So the areas of interest, that refers to the areas that we will be covering in today's presentation. We're going to discuss the taxation of employment income and business income. We will then move on once we have seen what income is taxable. We will move on to the tax application, the TCC application process. I know that is something that many of us will have queries regarding, and it is important for us just to go through that process so we all understand what it is. We will also look at the voluntary tax disclosure program, which is a 3-year program that started last year, 2021, and will commence until next year, 2023. And we will see how we can take advantage of that program to improve our compliance and bring incomes that we had not previously disclosed into the tax bracket. We will then end with a presentation on integrity and access to information. We all know our obligations. We will have a small discussion regarding even our national values, one of which, of course, is patriotism and integrity, and we will provide you with avenues and means through which you can inform KRA of any incidents regarding integrity, and how you can also reach out to us if you have a complaint that has been outstanding for a significant amount of time and that has been causing you distress. So this was already covered by Mr. Yeager, what he referred to as the tax cycle. He covered most of the areas. I think when he was referring to it, he was referring to it as the obligations of a taxpayer. But it is also the tax cycle. And the tax cycle, of course, begins with your registration as a taxpayer. When we register initially, what we get, and especially as professionals, is that income tax obligation. And, we have that obligation, as Mr. Yeager said, to assess ourselves and to file our returns as they fall due. If you are an individual, then your tax year runs from January to December, and your taxes and your return is due by the 30th of June. And you pay your taxes as they fall due. If you are fully employed, then your taxes are deducted by your employer, and then your obligation still stands to file your return by the due date. And then you deal with matters that arise. For example, refunds. We will take a look at how a refund, if you are an individual, arises and what you do should you have a credit and you want to pursue that refund. So we will first start our discussion with the taxation of employment income. And when we say taxation of employment income, we will look at individuals whose sole source of income is employment income. And that means that an employer, you are employed, and your employer, you may have a primary employer and a secondary employer, and we will see what the difference is. But in this instance, then all your income is subject to pay as you earn, and it means that it is deducted at source. And the taxable income includes both your cash pay, which we know as wages. Many of us are aware that our wages are taxable, and our non-cash benefits, as long as the aggregate of those benefits exceeds 3,000 shillings a month, then those non-cash benefits are actually subject to pay as you earn. And we will look into a few of these specific ones when we come into declaration of business income, in instances where you may be employed, but you are also running a business, for example, a clinic. And we will look into the compliance issues that arise out of the failure perhaps to compute and add non-cash benefits to the taxable employment income of employees. And we just mentioned that pay as you earn is charged on both residents and non-residents. So there are certain incomes that are not chargeable to pay as you earn. For example, meals provided by employers. I myself was an intern in a medical institution. I will not mention which one, when I finished my undergraduate degree. And we were actually provided with meals. We were provided with tea and with lunch. And those meals, as long as the value of that meal does not of those meals does not exceed 48,000 per annum per employee, that amount then you will notice is not added to your employment income when your employer charges you. And this is an important factor that, as we will see, when it comes to declaration of pay as you earn, in those instances that I mentioned, in which perhaps you may have a clinic and you are actually providing meals to your employees. And then amounts that are mere reimbursements, we refer to this as per diem, and it applies to when you are on official duty away from your normal duty station. And that is also not taxable. Medical cover that you are given by your employer, I'm sure we all noticed that that is also not included in our taxable income. And pension contribution, when you make a contribution to a registered pension fund, then you are allowed a deduction, and the effect of that deduction is to reduce your taxable income by an amount of 20,000 a month, and that's a maximum. The maximum amount is 20,000 per month. So there are different bands, payee bands. There are actually 3 payee bands, and the first band is 10%. And what happens is that any amount that you earn, we will take the monthly income that is up to 24,000 in a month is taxed at 10%. And the next 8,000, I think 333 is taxed at 25%. And then any amount at over 333 will be taxed at 30%. So the personal relief, every resident individual is entitled to a relief of 2,400 per month. And what that does is that it effectively makes it that if you earn 24,000 shillings or below per month, once you are granted the personal relief, then you don't have any pay as you earn due. So we will first take a look at, in this instance, what are the main compliance concerns that we can have if I am in the medical field. All my income is from employment income. What are some of the compliance challenges I can encounter? The first compliance challenge, of course, is the failure to file a tax return when it falls due, because the pay as you earn has been deducted. But now, as we said, if you are an individual, your year runs from January to December, and you are expected to file a tax return by 30th June. And so if you don't file a tax return, of course, that eventually when you do file the return, there will be a penalty that will have accrued of 2,000 shillings per year. So you may be thinking that my pay as you earn has been deducted. Why must I file a return? Maybe I work in a field in which I don't ordinarily have to seek a tax compliance certificate. That may be true, but we are also moving into a situation where, for instance, when you retire, you may require clearance, tax clearance, and trying to deal with 20 years of unfiled tax returns will actually form a serious compliance hurdle for you. And so it is important for you to file your returns, even if all the income has been, all the pay as you earn has been deducted. You will also find that you may desire perhaps to work abroad. I think during this COVID era, we have seen, and even markets open anywhere, and especially in a field such as the medical field, you may encounter an opportunity where you can work outside the country. And a lot of countries are now, they want to see a demonstration that you are fulfilling the civic duties, your civic duties in your country. And it may include even being requested for a tax compliance certificate. And so it is important for you, even if your employment income is subject to tax and pay as you earn is deducted as should be, it's important also for you to file a return. The second compliance issue that arises is one in which you are employed in one hospital, but you have a secondary employer. So you regularly, maybe you do locum in another hospital and it is regular, but you have not informed them that you have a primary employer and that is your secondary employer. And so what happens with regard to a secondary employer, because your primary employer is already taxing you, deducting pay as you earn on the graduated scale, then your secondary employer will now effect tax at the 30%. And so that is important because when it comes to filing the return, you will not have hanging credits that were deducted by your secondary employer. So it is important for us to inform our secondary employer so that that employer deducts at the correct rate and at a rate that doesn't result in our accumulating a tax due at the end of the year. So that is an instance in which all your employment income comes from employment, is subject to pay as you earn. The second now, before we move into business income, I think it is important for us to mention that if you are a person who is living with disabilities, that you are allowed or you are granted a tax exemption on your salary, on your income by your employer. And the exemption is on the first 150,000 per month. And when you calculate it per year, it comes to 1.8 million per year. It is not just for employment income, it is on your total income. And so if you have multiple sources of income, it then doesn't mean that my employment income has an exemption of 150,000 per month. And if I have a private clinic, my business income is exempt up to another 150,000. No, it is your total income, but you are entitled to an exemption. And when that exemption is not, if you have an exemption certificate, you don't present it to the employer, or it is presented to the employer and the employer doesn't effect it, what happens is that it results in a refund that is due to the taxpayer who has a valid certificate, and the certificates are valid for 5 years. So we mentioned the issue of tax refunds, and now when a question that is asked by many taxpayers is, how do I get a tax refund? How is it that I now am in a position where I'm entitled to a tax refund, assuming that your employer is deducting pay as you earn according to the graduated scale and is deducting it correctly? The first way in which you can get a credit
I think Susan is lost. Julius, I think Susan is lost. Susan's network has died.
Dr. Kigondu, I'm able to get you loud and clear. We are not getting Susan now.
Yes.
I know she's coming back on board soon. Let me just see if we can be able to access her from wherever she is. Okay. Sorry about that.
While we wait for her, I think we can have a word from the president, Dr. Were.
That's in order. That's in order.
Thank you, Steve. Apologies for joining late. I'm on the road. Network issues. I could not join you early, but I think I've caught Susan giving very critical information that I think is going to help us to be tax compliant with doctors. I know these are issues that most of us are normally caught off guard. We are not properly informed, and I think this is an avenue that we can be able to use to ensure that doctors are tax compliant and we contribute towards building of this nation. So we are grateful for KRA taking this time. But I was almost asking Susan to just repeat on the issue of the secondary income and the taxes that are due when you have a secondary income, because most of us find ourselves in that bucket and we wish to be compliant. Further, I know we had a meeting that this is just the first of the many engagements you're going to have with KRA. After this, we'll be looking at moving to the our different branches so that we ensure we don't leave any doctor behind in terms of issues of tax compliance. So thank you so much. I recognize the presence of the chair of the Medical Legal Committee, Dr. Naim Port, and my fellow national executive members, Dr. Mario and Dr. Otara. I think Dr. Super is also on board, and Dr. Kibondo, and we are happy for this initiative that has been taken by KRA to involve the doctors. Thank you. I see Susan is back. Maybe she can pick it up.
Thank you, Prezo. Susan, you're back.
Yes, I'm back. I think I dropped off the call. I hope I'm okay now. Can you confirm?
You are, Susan, yes. You're loud and clear, Susan. Yeah.
So maybe you can just confirm to me where I fell off the call. Did we
You can
cover
proceed from there, Susan.
Okay, so this is okay. I can then just maybe repeat what I had said regarding the meals that are provided by employer. I had mentioned that I myself was an intern at a medical institution when I finished my undergraduate, and we had meals provided by our employer, and that the cost of those meals is not included to your taxable employment income as long as the value of those meals does not exceed 48,000 per year or more per employee. And this will become more important even as we discuss the issue of declaring business income. If you have your own clinic and you have a similar situation where you are providing those meals or meals of that sort to employees. So amounts that are mere reimbursements, this is subsistence allowance. We refer to it commonly as per diem, where you are on official duty away from what would normally be referred to as your normal or permanent duty station. Medical cover that we are granted by our employer is not included in our taxable income, and contributions that we make to registered pension funds are allowable. It's an allowable deduction if you make a contribution as the employee up to a maximum of 20,000. So we had an overview of the pay bands. We had a discussion in which I mentioned that the first 24,000 per month is subject to tax, pay as you earn at a rate of 10%, and that the next 8,000 and 33,000 is taxed at 25%, and anything above 32,333 is taxed at 30%. And so what happens essentially is that once the relief is applied, every resident individual is entitled to a relief of 2,400 per month. What happens therefore is that anybody who earns under 24,000 shillings per month has no pay as you earn due. For persons living with disability, I mentioned that the first 150,000 per month of your total income is exempt from taxation up to a maximum, of course, of 1.8 million per year. And it is important that if you have a valid certificate, a valid exemption certificate, the certificates are usually for 5 years and then you have to renew it. It is important to present it to your employer so that exemption is effected, otherwise it will result in a tax refund. And the the 150,000 applies to your total income. It is not 150,000 on employment income. And should you have a business income, then another 150,000 per month is exempt. No, the 150,000 is for your total income. So the tax relief I mentioned that this is actually how a lot of people find themselves in a situation where they have a tax refund. Because if you take out an insurance cover on yourself, your spouse, or your child, and the insurance cover is for 10 years or more, and it is for health, education, or life, you are entitled to a relief of 15% of the premiums that you pay on those insurance covers up to a maximum of 60,000 per year. Mortgage interest, if you take out a mortgage with a registered institution and the purpose of that mortgage is to either purchase or to make renovations to a residential property that you live in, then you are entitled to reduce your employment income up to a maximum of 300,000 of the interest that you pay, not the principal, but the interest that you pay. And of course, the monthly tax relief. What happens is that if you earn less than 24,000 and your employer effects that 10% on the first 24,000, you will find that you may result in a credit, and that credit can result in a refund. So we will now move on to business registration. So we talked about the different scenarios under which your employment income is taxed and how you can be non-compliant even though pay as you earn is deducted on your employment income. So we will now talk about business income. And so this is a situation in which I am sure a lot of us, most of us may be employed, but still run businesses. Every Kenyan has what we refer to as a side hustle. So you may have a business, perhaps you have a clinic, or even you provide your professional services in certain settings. Perhaps you speak in conferences or you work with certain projects or conduct certain research. That is also considered business income. It is income that you are earning outside of the employment that you may have, your primary employment, and you are providing your professional service in a private or even in a capacity where you have registered a company. So there are three ways in which you can structure a business in Kenya. You can choose to operate a clinic, for example, under your own PIN, which means that you have not established a legal entity separate from yourself. And so you are still operating that business under your individual PIN. Or you can form an artificial person, a partnership, or a company. And so when it comes to taxation of business income, Kenya has what we have a source-based income system. And that means the income that is subject to tax is income that is earned in Kenya. But we also have instances in which you may have earned income both in Kenya and outside Kenya. And as a resident, you should declare your global income. So when we say earned partially in and outside Kenya, you may have the benefit of being invited to speak, for example, in a conference outside the country, and you are compensated for that. And that is now income that you should declare when you declare your employment income. So there are two regimes under which you can declare employment income tax. And the first regime is the turnover tax regime. And the turnover tax regime, I will not go into it very deeply because the turnover tax regime is essentially intended for trade. And it is for persons whose income falls between 1 million and 15 million per year. But there are exemptions. And the first exemption is in persons whose income is either below or 1 million or in excess of 50 million. The second is rental income, because there is a regime under which rental income is charged. That's the monthly rental income tax regime. The third is management or professional or training fees. As a doctor, you are offering a professional service, and therefore you cannot declare your income under the turnover tax regime. And then finally, any income that is subject to a final withholding tax. So then it means that as doctors or as medics, because you're providing a professional service, you are in essence exempted from filing under turnover tax regime, and therefore you file under the second option, which is the annual tax regime. So we are going to look at what happens in an instance where you are running a business, and by a business, I will say, for example, you are running a clinic or you are running a consultancy in which you offer your professional expertise. So how do you determine what taxes I am going to declare and what taxes I am going to pay? We said if you are operating as an individual, your year runs from January to December, your return is due in June. If you have, for example, incorporated a company, then your year runs from whenever the company starts, but your return will be due 6 months after the end of the year, and that is an important point for us to remember. So the annual regime, when it comes to declaration of business income, works through installments. You pay through installments, and what you do is you take your previous year's liability. So we will take, for example, we're in 2022. So you take your last year's liability. So if your tax liability in 2021 was 100,000, you increase that amount by 10%. So now the tax that you are estimating will be due for 2022 will be 110,000. And you divide that amount into 4. And so you will pay in 4 installments. So if we said if you are operating as an individual, or if let's say your year runs from January to December, even though you are operating a company, the first installment will be due by the 20th day of April. The second installment by the 20th day of June. The third by the 20th of September, and the final installment by the 20th of December. So what happens in 2023 once the year has ended, once 2022 has ended? What happens when I calculate my tax and I find that my tax due was actually 900,000? I will find that I have already paid 110,000. And then the remainder, the balance, we refer to it as balance of tax, that 790,000 will be due by the end of the 4th month, which will be by April 2023. So that is how you estimate what am I going to pay in installments for my business income if I have a business that I am operating. So we will take the first example where we assumed that you have registered a legal person that is separate from you. So this is what happens when you have, for example, incorporated a company. So maybe I'm running a clinic or a consultancy and it is registered as a company. So I am allowed to deduct the expenses that are incurred wholly and exclusively in the generation of that business income. So we talked about salaries and wages, and I think we covered when we were speaking about that, what constitutes taxable employment income. And one of the major areas of non-compliance when people run businesses is that they don't count all benefits, and especially non-cash benefits, in determining what is going to be subjected to pay as you earn. And that is a big challenge, because what happens is, should, for example, an audit be carried out, the authority will recover the amount from the employer. So you cannot say that I paid including the pay as you earn. So it is important for us to know that even non-cash benefits, as long as the aggregate amount of those non-cash benefits is 3,000 or more per month, are subject to pay as you earn. They should be included in the taxable employment income. Insurance for business, legal fees, rent. This is also important. Loan interest. I want to mention with regard to loan interest, that a major area of compliance and a compliance challenge is an instance in which you are an individual, you are a doctor, you take out a loan as an individual. The loan is intended perhaps to boost your business. So you are deducting interest on a personal loan. Even though you say that the loan was intended for business, it is important to note that that loan, as long as it does not appear in the name of the business, will not count as an expense that is wholly and exclusively incurred in the generation of that business income. And I think that is just to signal that should you want to take a loan, that you take the loan under the entity that will claim that loan interest deduction. That is an important thing for us to note. And then wear and tear and fuel, and of course, any other expenses. You know the industry better than we do. And so you know what other expenses go into running, for example, a clinic, and then you arrive at the amount due. So that is our net taxable income. So the tax rate on a company is 30%, and therefore you will see that the tax due there will be 900,000. So now let us take an instance where you are an individual. The amount of income is the same. So we see the gross business income is the same. That is 3.550, and the expenses are the same, 550,000. So we spoke about mortgage interest and how mortgage interest reduces what we have as a taxable as a taxable income. So if you had a mortgage interest, assuming that this is an individual, and this individual had taken out a mortgage, and that mortgage was used to purchase a home that is a residential home, and they are living in, and they have an interest that they have paid over the year of 300,000, that mortgage interest then would reduce. You see where we have mortgage interest? We took an example where this individual did not have any mortgage, but it would reduce the amount of taxable pay by the value of that mortgage interest. So in this example, we have an individual who has a pension contribution, and their pension contribution was 5,000 per month. And we said that you are entitled to deduct pension contribution to a registered pension scheme up to 20,000 per month. And so this pension contribution now in the year was 60,000, and therefore the taxable pay we see is 2.9, and that is different from what we saw in our previous example, because the company is not entitled to this benefits, these reliefs that we spoke about. They accrue to resident individuals and not to corporate bodies. And so the graduated scale still applies. We can see here the first 24,000 is taxed at 10%. The next 833 at, the first 24,000 is taxed at 10%, yes. The next 8,333 at 25, and anything above that is taxed at 30%. So we have what is tax payable. And then now we have that annual personal relief. Now, this annual personal relief refers to the relief that we mentioned, that every individual is entitled to, of 2,400 per month. Also reducing the tax due is the insurance covered. We mentioned that every resident individual is entitled to a relief on any insurance premium they pay on themselves, their child, or their spouse, as long as the insurance is for life, education, or health and has a maturity period of 10 years or more. So in this example, the 15% amounts to 9,000, and we have a tax paid or a tax payable of 838. So now we have withholding tax. What happens in an instance where this individual had provided certain services? We have said that if you provide your professional services, you will count that, and you have provided them not in the setting of employment where pay as you earn is deducted, but you have provided them in another setting. You are perhaps engaged for a contract, a short-term contract, and they withhold 5%. What do you do with that 5%? So in many instances, we have professionals who assume that this withholding tax of 5% is a final tax and that no other further action is expected from you. While in actual fact, this 5% withholding tax, it is actually not an additional tax. It is simply a method that allows the authority to improve tax compliance. And what it does is that it informs us that this person was contracted for a professional service in which they were paid a certain amount and the 5% was deducted. But you still have to come and declare your entire income. You still have to come and put that amount in your income tax return. If you have employment income, you will declare employment income, and you declare any other incomes you earn and on which withholding was deducted as business income. And so we will go back to our previous slide where we have tax paid of 338,000. So what happens if, for example, 1 million of this amount was an amount based on a service that I provided to somebody, and they deducted 5%. So once that 5% is effected, the 50,000 will further reduce the 838,000. You will still be allowed, however, to deduct any expenses that you incurred in providing that professional service. Okay, and so if I'm operating a consultancy and I'm an individual and there are certain expenses that I am incurring that are wholly and exclusively related to my generation of that income, it could be stationary, I am entitled to reduce those expenses. So that is where withholding tax comes in. So I think for the part of business income, the compliance challenges that we see, I have already mentioned. One, assuming that withholding tax on a professional service is a final tax and no further action is expected from you. The second one is deduction of expenses that are not related to the business. So they're not wholly and exclusively related to the generation of income. The third is failure to include all income that is taxable on employees. So for example, you may be giving them certain benefits and you're failing to include those benefits in their taxable employment income. Because what will happen is that if you yourself are running a clinic or are running a professional service such as a consultancy, and you have engaged employees full-time, or even, you know, we have a misconception. Sometimes people say I have employees, but they are casual employees. So it is important for us to know that if you have engaged, even if the employees are part-time employees or they are regular casual employees, then they cannot be classified as casual employees not subject to pay as you earn. No, casual employment that would not be subject to pay as you earn would be if, for example, you have an employee who you have engaged for a period of less than a month, and so they're just coming in to do something small and they go. But if you are keeping them regularly, they will not constitute what you are referring to as a casual employee. So that assumption, failing to register for pay as you earn, even though you have employees who have reached the threshold, is a compliance concern, and it's important for us also to remember that we need to also register for that obligation. So this is a summary of your annual tax regime. So the first thing is to take your actual tax liability from the previous year, to increase it by 10%, to divide it by 4, to pay those installments as they fall due on the 4th, 6th, 9th, and 12th month, and to pay what we refer to as balance of tax by the end of the 4th month of the next year. So I'm going to allow my colleague, Franklin, to proceed from there in the tax compliance certificate application process, and then we will come back for a Q&A.
Okay, thank you, Susan. Can you hear me?
Yeah, Franklin, you're audible.
Okay, thank you. Now I'm going to cover what is a tax compliance certificate. While Susan was presenting, I have seen someone asked, maybe he was asked for a tax compliance certificate by NHIF and he could not get one. So this certificate is one that is issued by the commissioner if he is satisfied that you have filed your tax returns. Remember at the introduction of this meeting, Mr. Yeager said that as a taxpayer, you're expected to register, file your tax returns, you make payments, and you assess yourself in an appropriate way. So if the commissioner is satisfied that you have done that, you are issued with a certificate for that purpose. So a tax compliance certificate is issued to you by the commissioner if he is satisfied that you have filed your returns and you've paid your taxes appropriately. Should you not have filed, maybe you have made an arrangement with the commissioner to file and pay them at a later date, or with the agreement that you have agreed with the commission on that purpose. So that is the purpose of a tax compliance certificate. Next. Now, how do we apply for a tax compliance certificate? As a taxpayer, TCC is processed on iTax. Okay, so in this instance, as a taxpayer, if you have filed and paid your taxes on time, there are no penalties whatsoever. You request for that tax compliance certificate. But currently, it used before that we used to you used to request for that compliance by going to a tax station for that to be processed. But currently, if you have filed and paid your taxes, you can apply for that compliance certificate from the iTax portal that we have. We remember that we do file and pay taxes online. So the system verifies the tax compliance status for you as a taxpayer. And if there's any pending tax return that you have not met, or maybe there's any pending tax liability that you've not paid as a taxpayer, you do not get that tax compliance certificate until you either file that tax return or pay the tax liability that you have. Okay, so you get informed by the system that this is what is pending, whether it's a return that you've not submitted or a liability that you've not covered as a taxpayer. So the liabilities can be a principal tax or even penalties and interest. So where there is any pending principal or penalties or even interest, and you have not paid as a taxpayer, you do not get a tax compliance certificate. So remember that and note. So these are the instances where, as a taxpayer, you realize that you can't get a tax compliance certificate because there is a reconciliation issue. Maybe your employer has deducted pay as you earn from you, but they have not remitted the deductions they made. Now, when you file your tax return, there's obviously in accounting, we say the balances, the credits and the debit balances should always balance in every instance. So if your employer has deducted pay as you earn and they have not remitted, now when you file your tax return, you realize that it will show that you have, yes, this is the much that you're supposed to pay as tax, but now your employer has not remitted the deductions. So in that instance, you realize that there is a reconciliation issue. From your P9 form, now it informs the commissioner that this is what was deducted from me as tax, and this is what I assessed myself while submitting a tax return. So should there be a difference, maybe there be a debit difference. So it means that you are supposed to make payment as a taxpayer. But now if it balances, if what was deducted by your employer is equals to what you have assessed yourself in making your tax return, so it means the balances of your credit and debits are reconciled. So in that purpose, so remember, we've had instances where taxpayers do not get compliance certificates because their employer has not remitted the credit, the pay as you earn deducted from them. Okay. Secondly, there's an unpaid principal tax. I said you can't, if there exists an unpaid tax in your profile as a taxpayer, you don't get a tax compliance certificate. The good thing is, when you make an application in iTax, you get to know what exactly is the problem that I'm having. Why am I not getting this certificate? So if you have not paid a principal tax, and that is from the assessment you made, or even an assessment that has been made by the commissioner, either a default or an additional assessment for that purpose, or an amended assessment for that purpose, it means that you have not paid the tax and you can't get a tax compliance certificate. Again, I talked about penalties and interest. So if you have not paid this, which results from you not filing your tax returns on time, or even not paying the same taxes on time, so you get charged an interest. So if you have not paid this, you do not get a tax compliance certificate. Okay. Yeah, I can see a number of questions touching on tax compliance certificate. We're going to respond to them. Next. Again, you have not filed a tax return. So for example, you've not filed a return for the year 2020, an income tax return for the year 2020, and you want to apply for a compliance certificate now. Remember, you were supposed to have filed that return by 30th of June last year if you are an individual. Now, if today you want to apply for a compliance certificate and you did not file that return, definitely you won't get a compliance certificate until you file that return. And when you file that return now, you realize that this outstanding tax return turns to be an outstanding. Maybe if there's no principal tax due, there's a penalty and interest for late submission of that return. Okay, again, it moves from an outstanding return to a penalty or an interest if you had any principal tax not paid. So remember to file your tax returns on time every time you all of the obligations that you have. So I had majority of us obviously will be having an income tax return. So again, lastly, we've had instances where taxpayers are registered for obligations which they do not file taxes for. So should you be having an obligation, let's say, for example, we have majority of people would apply for the pay as you earn obligation, which is restricted only for employers. because maybe you thought, now I'm getting employed, so I should be having a pay-as-you-earn obligation. That's a wrong obligation. If you're not an employer, you should not be having a pay-as-you-earn obligation. So should you have that obligation and you've not been filing any tax return, when you try to apply for a tax compliance certificate, you can't get it because you have not submitted a pay-as-you-earn return. Pay-as-you-earn returns are done monthly. Like every time you paid by an employer, the employer is expected to deduct and pay as you earn before 9th. So in this case, if you have that obligation, it means that having not filed any return for that obligation, you cannot get the tax compliance certificate. No, in this instance, you're expected to request for cancellation of that obligation through iTax, which is processed by a KRA officer. Next. Yeah, I think this is what I have covered. Now the process of getting a tax compliance certificate, if any of the instances arise, so you get into a plan. So if you have a principal tax due, so you can be given a tax compliance certificate if you get into a payment plan with a commissioner. Okay, so the commissioner, you get into an agreement that I'm going to pay this much of tax this day, then I'm going to pay the remainder in such and such installments that you might agree. So you can get an agreement with an officer and that represents the commissioner in that case. So you get a tax compliance certificate, having gotten into a payment plan, and then you adhere to the payment plan. Should you fail to pay as agreed in the payment plan, obviously that withholding that tax compliance certificate is withdrawn at any instance. Okay. Now, next, I'm going to talk about voluntary tax disclosure program, which we are currently in its second year. So it's a confidential 3-year program that started in January of 2021, and the program ends next year in December. So if at any instance for the periods from 1st of July 2015, in any period between 1st of July 2015 and 30th of June 2020, so you did not pay or you did not disclose some tax liabilities. So we're saying you're given an opportunity to disclose. You request to the commissioner to disclose these tax liabilities that you did not disclose at that time. Now the catch is that you're given a chance to first, in the first year, which was last year, 2021, if you pay all the tax liabilities that you've disclosed, let's say in the year 2018, for example, 2018 falls within the period. Now in 2018, you were employed and you are running a clinic or you had a business. So there were withholding taxes that were being deducted by your maybe secondary employer or maybe where you do your locums from. So you did not disclose that income, or even you ran a clinic at that time. And from that clinic, you had an income that you're supposed to have paid taxes for, like what Susanna said in the previous, in her presentation. So if you take an advantage of this, now you disclose the business income that you had at that time, and then there's a tax liability that arises from you making that disclosure, okay? So the commissioner would have given you 100% remission of the penalties had you disclosed the tax liabilities last year. Currently, we are in the program's second year. So in this case, it means that should you disclose the income for that period, for the 2018 period, for example, this year, and you pay the entire tax principal tax amount. So the commissioner gives you 50% remission of the penalties and interest from that submission that you have made. Okay. So if you miss to do that this year, so you still have a chance to get 25% remission next year for that income that you did not disclose in 2018 in our example. So there's this note that now you expected, while doing so, you expected to disclose all the material facts relating to the business or the income that you did not disclose at that time. So failure to do so, and should the commissioner realize that you did not disclose the material facts for that, for the submission that you're making currently, the commissioner has the right to withdraw any relief that you would have been granted from making that disclosure. Okay, so make sure that as you try to take an advantage of this program, ensure that you disclose all the material facts relating to that business or the income that you did not pay taxes for. Okay, so there's the last point is that if you now, as a taxpayer, you are under audit, you have been investigated by you're being investigated by the commissioner, or maybe you are party on ongoing litigation relating to a tax liability. So the commission, you can't get an advantage, you can't take an advantage of this program. So you can't be part of this program if you're being audited, you're being investigated for a tax liability that you did not pay, okay? And maybe if you've also been notified of a pending audit or investigation, so you cannot take an advantage of this program. So as we speak, I would like to maybe to advise you as taxpayers to take an advantage of this program. It's confidential as it is, and then after you filed and paid the tax liabilities that you did not disclose at that time, you get a certificate that protects you from any further audit for that period that you have made that submission. Next. Next. Okay. And lastly, like Susan had said, we have now integrity and access to information. What are the measures that we have put in place as KRA to address corruption? So unlike before, where we used to have manual submission of tax returns, currently Kenya Revenue Authority has automated the iTax, like a submission of tax returns. For example, we have iTax. iTax is where a taxpayer submits and pays their taxes online. We have ICMS, which is an integrated customs management system for customs. We have an electronic cargo tracking system that tracks cargo that enters and exits Kenya, that transits Kenya. We have a virtual document processing center. We also have where a taxpayer in the entry and exit points, you can pay all the taxes at a one-stop border point. Okay. Secondly, in all the KRA stations that we do have, there exists a taxpayer starter that tells you as a taxpayer, what are your rights? What are the obligations of an officer in that office? What are obligations of a taxpayer? And at what cost are the services that are being offered at that station? Okay. And then thirdly, we have established an investigation and strategic operations department that oversees integrity in the authority. So it does lifestyle audits, it vets and investigates staff and even tax evaders. We also have training of taxpayers and the general public on integrity, like what we're having currently. So we notifying you as taxpayers that should you be in a situation where there's a compromise, an officer is trying to compromise you, you can report through the mechanisms that we have. For example, you can call the number 0726 984668. You can write to corruptionreporting@kra.go.ke. You can also write to CIC@kra.go.ke. Even you can write a letter. Now we have an informal reward system where you paid 5% of taxes that is recovered. Now, should you inform the authority of a tax evader and tax is recovered from that taxpayer? So 5% of what is recovered from the taxpayer is what you are given, or that is a reward to you as an informer. So there's that. Obviously, the maximum amount that you can receive as a reward is 5 million shillings from your information. Thank you so much. I think I've come to the end of my presentation.
Thank you very much, Franklin. I think we can hand the meeting back to the host and we can go to the Q&A. So I don't know if we can just proceed to the questions, or if you would like to read out the questions. Maybe Dr. Kigondu, you can advise if we can just proceed or to address the questions that are in the chat.
Oh, I think thank you very, very much for that very heavy presentation. And as you have seen that the Kenya Medical Association is a big time doctors association with the attendance that we are having. And I think we need to be having more and more of these programs. I would hand over to Dr. Eli Nyain, who is the convener of the committee, to take some of the questions. And and just run through them. As you can see, there are very many. But I may start with one on a light note where Dr. Carrie Francis has asked whether erectile dysfunction is a disability and whether he having erectile dysfunction can get a disability waiver. But that's a rhetoric question. You don't need to answer that one. Dr. Eli Nyaim.
Thank you, Simon Kigondo. I can answer that. He will need to be assessed by a competent urologist and the report generated to prove that there's a disability. And I'll encourage Julius and Kimutai, if they have no idea what that means, they can see us kando tuwaelezeni kitu gani. Having said that, I want to thank you very much. This is a very, very beautiful engagement. And I'm glad it has covered a lot of areas that people ask that people don't understand. Perhaps to do justice and to manage the time that we have, Julius and Kigondo, I would like us to perhaps then just go to the questions directly so that we can respond to as many as possible. And then we will have maybe a short time to verbalize some of the things that have not been asked and have not been answered. So Julius and your team, please just pick the questions and respond, please.
Let me just guide. I think I can start. The first one is what I alluded to, Julius, and I told you you'd get a question on this. Dr. Subarao Madineni asked about the issue of single business permit, which has been an issue that has been bothering us for a long time, and there has been harassment by the KRA and the NMS and other counties also. So I think there have been very many court judgments saying that doctors who have paid to the medical board for their businesses are not subject to single business permit. But as of late as today, we have your officers, even at KMA Center, coming to, in quotes, harass people on single business permit. 1 minute, a comment on that, then we'll move on to the substantial tax questions. Julius?
Sorry, are you getting me?
Yes, we get you now.
Yes, Julius,
thank you very much. Just to respond to the bit of the earlier on, Kenya Revenue Authority is very, very clear from our end that taxpayers need not be harassed by anyone. Cases do happen. It's important that such are brought to our attention so that we are able to handle that professionally. So I would want to take this opportunity to say that we really regret such things. And if it's actually happening, to take it up with both yourself and our team so that those things can be sorted out professionally. That's what I want to say at this point in time. And I'll be able to engage our division or the division that deals with county revenue division so that we are able to be at same level when it comes to such scenario. That is highly regrettable. And we really, really want to get that detail in the morning with our teams that go out in the field. Dr. Kigondu, that is regrettable. Thank you.
Thank you. We'll be sharing our concerns with you. The next question, do I qualify to pay installment tax as an individual doctor, not an institution? I have been asked by a KRA officer to start paying installment. That's Dr. Charles Jackson. Maybe quickly, your team can take. I
think I can take that question. Yes, if you have business income and as long as the tax that is due is over 40,000, then yes, you should also pay the installments. And we have discussed how you come about the installments, but you should also do so. You should also use the installment system if you have business income and that business, the tax that is due is 40,000 and above.
Okay, Kigondu, can you take bring up the other questions, Kigondu?
Oh, sorry, I was muted. I was talking to myself. If I have an insurance for 2 years now, but I have never enjoyed tax relief, can I get a refund from KRA if I present my tax relief certificate?
Okay, so when you say present, what happens is that that insurance certificate has to be included in your declaration for that year of income. And so what you will have to do is, if you did not declare it during those years, is to obtain a certificate from the insurer and then amend your tax return to capture that certificate, and then you can pursue the refund. But that certificate has to be captured in your return.
Thank you. I'll highlight the next one, which the question is, what is the deadline date for the employer to file and submit withholding tax? By June, when one is completing the individual returns, should we expect any pending withholding tax returns by the employer?
Okay, can I take that question?
Please do.
Withholding taxes as an employer, first of all, or maybe if you're offering professional services, the person that is receiving that professional service is expected to remit that withholding tax by 20th of the next month. Okay, so when you are filing your tax,
okay, maybe just to extend that, Kimtai, I've experienced, and many doctors have experienced this, that you offer services in a place where you're not employed, consulting services. And as soon as you put in your invoice when the patient goes, the withholding tax is declared and you get information, and yet the institution has not paid you, and sometimes they don't pay you, and yet you've already paid the withholding tax. So how do you reconcile this?
Now, in an instance where you, the person or the recipient, the hospital that has deducted withholding tax from a payment that has not been made in that instance, you realize that KRA, what you're going to do, we expect you to have that, the withholding tax that has been deducted from you is a credit. Now, what is expected of you? You see, for tax purposes, we work on what we call accrual basis. So it is when that amount has been earned, it is when you earn that income. So the income that you're declaring when you're filing your tax return is based on, we say you declare based on when did you earn, okay? Not when you are paid for that purpose.
Okay,
then,
I'll probably insist, because once KRA has information, and you should, on iTax, they actually send you information that we have generated this withholding tax certificate number, this from this institution. But a lot of my colleagues will agree that sometimes some of these fees take even a year or a year plus before being paid, and yet the withholding certificate has already been given and declared. How do you reconcile that? How do you mitigate that?
Okay, let me give that to Susan to respond, or I can see Nixon Omondi with us.
Okay, I can proceed. So what happens is that what Nixon has said is actually accurate, but you also have to remember that the return that we are talking about, so you will have estimated your income. So the installment tax that you are going to pay, you have already been paying it. The declaration of that income has to be made in the return that you will file on the 30th, by the 30th of the following year. So you are an individual, right? And you have been paying your installment taxes as you should have. So then the expectation is that that amount that you had earned, you will include it in the income tax return that you will declare by the 30th of the next year. So if we're talking about, for example, income that you earned in 2021, so we are talking about by June 30th of 2022, you will have included your entire income. I think what I can do is I can actually, what KRA can do is actually appreciate what you are saying. It is actually an issue that is raised, and not just with regards to income tax. I think we normally see that in instances of VAT where we perhaps have a tax point. But as it stands, what Franklin has stated regarding the law is actually true, that the income is on accrual basis, and that the anticipation is that if you have earned the income, you will include it in your return.
Thank you very much for that. The next question is short one. Are stipends taxable?
I think what we mentioned is first, what is constitutes taxable income, and you may refer to it in various forms, but the question is, does it meet the threshold for VAT, for pay as you earn? I beg your pardon. Does it meet the threshold for pay as you earn in that? Is their amount 24,000 and above? And then secondly, is the amount, is it a regular amount? Because we saw what we will only count as, for example, a casual employee with someone maybe that you have engaged for a period of a month or less. So yes, as long as that amount actually meets the threshold for pay as you earn and it is a regular income, then it will fall under the bracket.
Okay, thank you. There's another one here. Stella Kanja is asking, does someone who pays for the insurance by M-Pesa and not check off from salary qualify for the tax relief? How do they receive the refund?
Yes, you qualify for the tax relief, because the qualification is based on the payment of the premiums and not on the mode in which you pay. And so what you will have to do is to obtain the certificate at the end of the year while filing your return, so that you include the details of that certificate, and the details will include the amount of premiums you have paid, the assured amount. So there are certain details that you include, and all you have to do is to obtain that certificate from your insurer, and yes, you qualify for that relief.
Okay, thanks. There is an interesting question from Ben Budia. He's asking, why is it always assumed that the current year's income will always increase in the next year? I don't know.
Okay, So okay, it is what the law states. But I want to say that if you are able to make a reasonably accurate assessment of what your tax due will be, in the current year, you can use the current year method. But it is what the law accounts for, that you use, if you are using the previous year, that is the method that you use. You add 10%. So it is enshrined in the law, so to speak.
Do I assume that then if you do that and you can actually prove that you made a loss, then you qualify for a refund?
The refund is on overpayment of taxes. I think it is the loss. What you would be trying to do is to carry forward a loss. The refund is on overpayment. Yes.
Okay, I hear you. The same Dr. Mbudia is asking, can withholding tax be paid at 10%? And I suspect perhaps some people have deducted at 10% wherever he works.
Not for a professional service. I think the law is clear with regard to that. What I suspect is that he may have incomes that are subject to withholding at 10%, but not necessarily income from the provision of a professional service.
Okay, there's one that I will not read out because he's anonymous, but I would like you to, do you have access to the questions on Q&A?
Yes, we do.
Okay.
There's one by anonymous attendee who has written 3 points, which are very interesting. Perhaps you need to look at that. And then we have Daisy Korir, who is asking, after withholding taxes deducted and paid by someone who obtained professional services from you, are you still supposed to pay the remaining 25% less expenses incurred in offering the service? Or are you saying that there's no more obligation to pay the 25%? I think you've addressed it, but because it's been asked, maybe just clarify it.
So I think you are right. It was clarified. You need to declare that 5% withholding is not a final tax. You need to declare your income, and you are allowed to deduct any expenses that you incurred wholly and exclusively in generating that income. And then you subject that income together with whatever income you will have to that graduated scale. The return is a smart return. Once you enter the details, the rates you don't have to compute for yourself, they will be computed in the return. But yes, the further action that is required from you is the declaration of that income and the deduction of any allowable expenses you incurred in generating that income.
Okay. There is a recurrent question. I think that's very easy, even Kigondu can answer. Provision of the recordings of this meeting so that people can keep it for revision.
I've actually answered, and this recording will be present on the KMA YouTube page for people to go through again and send to their friends. Thank you.
Okay. Another question is, if you pay advance tax over several years, is there a way you can use it for clearing more current tax?
Okay, I'm trying to see what scenario they mean. For example, if you have overpaid in one particular year, if you have paid in overpaid tax in one particular year, you request for a refund of that tax. So what you can do, but that usually happens in instances where, for example, you have, say, a VAT refund, which doesn't apply here. I think I even saw a question regarding whether the medical services are subject to VAT, and no, they are exempt. So you will have someone who will apply for a refund. The refund will actually be processed and then will request in writing for that amount to be offset against a liability that they have in another tax head. But I don't know if my colleague Nixon is here. Nixon may want to say something briefly about this. Nixon, maybe you can unmute him, Nixon Omondi.
Yes, Susan, you're able to hear me?
Yes, we can hear you.
Thank you. I think the issue is if you have any overpayment, the law allows you that you request for your refunds, but there's also a provision where whatever the overpayment can also be used to reduce your tax liability if it exists. And if that is going to happen, always KRA will notify you and you can have a discussion around it. But you're entitled to a refund of overpaid tax.
Thank you. There's one person who's asking here, if your employer pays you via check or cash, but does not remit any deduction, can KRA question my bank deposits?
I think I can address it from a tax compliance issue. And the tax compliance issue here is, if your employer is paying you regularly, not deducting pay as you earn, the pay as you earn is due from your employer. Now, you, on the other hand, are still supposed to declare your income. You have not declared your income, but the obligation to deduct pay as you earn rests on the employer. That is what I can say. So unless maybe Nixon, you have another point of view.
Yes, so I wanted to comment. I hope I'm very clear.
Yeah, you are.
That most of the payments made by employers are withholding form of. Even the pay as you earn that employers make is a kind of a withholding. It's like an advance tax. They are paying on your behalf. And that is why at the end of the year, you are still required to file a return of all your incomes. And then you take credit of what taxes the employer had paid in the course of the year. So it is important you still file your return. Remember, the law is still is very clear under the Tax Procedures Act that if the employer fails to deduct as required, and you go ahead and do your taxes as required as well, we still follow the employer for the amount they never remitted as if that was their tax. So you go on with your obligations, and the employer should also proceed with their tax obligations as required. Thank you.
Yeah, but I think the significance of that previous question is there are situations where you actually work, but every month the employer prefers to give you payment by cash, which you carry in your pocket, or by check, which then of course you have to put in your bank. So in that case, unless you become honest, then it means your employer might actually not declare that they actually paid you. but yet you're going to deposit this money in the account. So I think that's where the question is coming from.
Okay, so outside of the clarification that Nixon made, which is that if you are a regular employee and your employer is not deducting pay as you earn, you are still required to file your return. I think what the question actually is an assurance or a confirmation. Can KRA check my bank account details? And I don't think that is something that you know, we can authoritatively say sitting on this side that yes or no, this can happen or can't happen. But what we can say authoritatively is that you still have an obligation to file your return.
Thank you. There's another very interesting question. Can I file nil returns if my bank account has a monthly deposit of check or cash?
I think what's important to note is that the return is a declaration of income. It's and I think it's a perception that we need to get away from, which is that, you know, what Mr. Yeager had said, KRA is not a big bad prefect with a stick, and I'm trying to find ways to get away from that prefect. It's that the return is supposed to be a true declaration of your income. And so that now leads us back to the same question, which is essentially asking, if I don't declare my income and I file a nil return, will KRA find out? And we will bring you back to that. You have an obligation to declare your income, and that if it should happen that, you know, an audit can be conducted, maybe you are providing your services at a firm and that firm has claimed those expenses, and an audit can be conducted, and it can then come out that you actually were paid an amount that they didn't withhold tax on and you didn't declare either. So there is no saying whether, you know, whether or when KRA will find out about it. But what is certain is that you do have an obligation to declare that tax, and that it is quite possible that it will be found out that you didn't declare taxes. I think that is what is important.
Thank you very much. There's a recurrent question from many people. So I'll probably summarize and say, and a lot of doctors on this forum are actually suffering. The employees of parastatals or government corporations like the universities, the county governments, where they have P9s which show that the pay as you earn was actually deducted, and they filed their returns and they've actually uploaded the P9s, and yet they're still unable to get tax clearance certificates. The question is, why would you want to blame the employee while it is clear that from the P9 that this pay as you earn was deducted from source?
I think I can make an attempt at that, if that's okay. So that is actually something that we can appreciate, and we are actually dealing with that issue two ways. The first way, of course, is, you know, we do have a public service division, and they are working very hard to regularize the online reflection of those amounts in the various ledgers of the employees. The second is that there is actually a framework that has been developed where if you are a public service employee and pay as you earn was deducted, and that pay as you earn is not reflected in your ledger, and you do want to apply for a tax compliance certificate, you can actually present yourself in your tax service office with your P9s. So you have to go with your P9s, or you can write, if that has already happened, perhaps you have already presented your P9s and received no feedback. I think Franklin gave an email, cic@kra.go.ke, through which you can raise that complaint or that concern. But there is a framework because there is a recognition that that is actually a challenge that exists, and not just for medics, but perhaps for other employees whose employers are in the public sector. But it is something that KRA is actively working to resolve, and not just from that perspective, but also with getting those credits to be reflected in the various accounts of those employees.
Very good. Thank you for that answer. That has actually, there are a lot of questions that actually apply to that. That's why I summarized it. But somebody here is wondering why they've never gotten any relief yet they qualify because they have a mortgage and they have an insurance. Maybe they need to give us the details whether they've actually declared that on their tax returns, or the employer is aware of that. But perhaps let's hear from the KRA team.
I think you captured it very well. Without knowing the specific year and perhaps even the specific PIN, we cannot say authoritatively whether that certificate was actually captured in the return. Possessing the right and not failing to declare the amount means that there is no visibility of that relief with regard, from the perspective of KRA. So you have to make sure that you have obtained the certificate and you have entered the certificate details, because there are people who actually pay the mortgage and never get the certificate and therefore are unable to actually declare the certificate because there are certain details from that certificate that are required. But if that has happened, then you will have a tax credit, which means you have a task number, and then you are able to follow up with that. That is something that can be pursued if indeed you have captured those certificates, both the insurance relief, the insurance certificate, I beg your pardon, and the mortgage certificate.
Thank you. Simon Kamande is asking that please clarify the difference between penalties and interests.
Let me try to respond to that.
Yes,
Yes, I can.
yes.
Can you hear me?
We can hear you.
Now, penalty is the fine that you get to pay for not, for example, for not submitting your tax return on time, in time. And then you can also be penalized for not paying the taxes that you ought to have paid at a certain time. For example, you could be, when you file your tax return and you realize that you're at a taxable position, you're supposed to pay 20,000 shillings and you don't pay in time. So it means you get penalized for not paying that tax. And then there's also an interest. Now, on interest, it is what is charged for you holding the tax that you should have remitted to the authority or to the government through the authority. So the penalty is a fine for not doing that return in time and not paying the taxes that you should have paid. And then the interest now is what is charged on you holding the money that you should have remitted in form of tax.
Thank you. That's very clear. Again, I'll address something that is recurrent. Basically, something to do with tax refunds. There are two issues. What are the conditions for you to get a tax refund? And somebody points out that bank guarantee system seems to have stalled with money stuck in there. Is it still handled as refunds? And the second one is they have pending refunds from previous years, 2016, 2017, and so on. How do they pursue getting these refunds?
So I think I can answer that. We are talking about a complete refund, because there are very many instances in which somebody actually has a credit that they have filed but have never provided the supporting documentation. So that is where we start. If you do have that, and maybe even you have pursued it, but then you have reached a position where you either are not receiving feedback, or maybe you have not heard from us with regard to that, even though your refund application is a full refund application. So we do have service level agreements with our taxpayers, such as yourselves, with regard to payment of refunds and the like. And so what I would say, if you do have an instance such as that, where it is not an instance where you failed to declare or even provide documentation, I think I can type the email that we mentioned earlier in the chat box, and then you can escalate that query through those channels, through that complaint resolution mechanism, and you will be requested to provide the documentation demonstrating that you have the necessary documents to process it. So I will just type that email so that we can have everybody who perhaps has that situation to us.
Thank you. There's a very short question, but perhaps very important. What are the legal enforcement methods that can be applied by KRA in case of defaults, and how do you mitigate them?
I think I'll let Mr. Nixon Omondi answer that. Nixon, are you
Nixon,
there?
are you with us? He seems to have fallen off.
Oh, okay. So I think the person was inquiring whether what are the mechanisms that are available to the commissioner to. So what initially happens is that the commissioner will initially issue a taxpayer with a notice of intention to assess, and that is when in instances where the commissioner is aware through other sources, perhaps KRA does operate usually on data-driven mechanisms or measures. And so they may have data. So the commissioner may be aware that you have income that you have not declared and will issue a notice to assess. And that notice will essentially tell you kindly declare your income, or the commissioner will have no option but to assess it, the income that is due from you. So if, for example, you don't assess, then the commissioner will proceed. You don't declare, the commissioner will proceed to do so. She will proceed to issue a demand notice, and you do have 30 days, to object if you are not in agreement. So if you don't respond, then there are other avenues that are available to the commissioner, including what we call an agency notice, which is the collection of amounts that are due to the commissioner from persons who are holding money on your behalf. And I think perhaps the person who is inquiring may have heard of instances where the commissioner may have, for instance, written to a certain bank requesting that, that the amounts that they are holding on behalf of a certain taxpayer are paid to the commissioner for taxes that are outstanding.
Thank you very much. There is another quick one here from Dr. Hosea Oweru, my senior. Under what circumstances will a taxpayer be liable for VAT? And he says here he has two very annoying emails, each demanding a VAT of Kenya shillings 190, and he gets no reply from KRA when he gives the responses for details, when he asks for the details.
So a taxpayer is due for registration for VAT when the taxpayer supplies or offers VATable services. And if you want to know whether you are offering a VATable service or supplying a VATable good, I would advise that you go through the VAT Act is actually on the KRA website. The first schedule contains the exempt supplies, the second one, the zero-rated supplies. So as long as you are not supplying either a good or a service that is listed in the first schedule, and I think I mentioned that the provision of medical services is actually an exempt service and therefore not VATable. So if you are doing that, you are supplying a service that is not listed in that first schedule, then it means even a zero-rated product is actually something that is taxable. If you're providing a zero-rated service, or it's just taxable or VATable at 0%. So as long as what you are supplying is not listed in the first schedule, and the turnover in any 12-month period is 5 million and above, you are required by law to register for VAT. That does not mean you cannot voluntarily register. But if you don't provide a VATable service and you are not aware of you having done so, it could be that you erroneously registered. And this happens a lot of times when you get a PIN, perhaps when you are younger or a long time ago, and then the obligation was added perhaps even by virtue of the person who was in the cyber, the manner in which he explained whether it is VATable, whether you should register for VAT or not. So if you are not providing a VATable service, you are solely providing medical services, you need to first log into iTax. You go into certificates and you download your PIN certificate, because it may very well be that you have VAT obligation on your PIN. If you're not providing a VATable service, which is any other service that is not listed in the first schedule, and you've not reached the threshold, then you need to apply, as Franklin had stated in his presentation, for removal of a wrongful obligation. You may be asked to provide documentation in support of the fact that the income you are earning is not VATable. If you are in the medical field, I believe it may not be difficult to do so, because whatever income you are earning, you are able to demonstrate is from the provision of an exempt supply. So that is what you first need to do. You need to print your PIN and ensure that you don't have a wrongful obligation of VAT. And if you do, you then can remove the obligation still in iTax. You initiate the task.
Thank you for that. The other question also is, if KRA writes to you and says you have a tax liability and give you a figure, and yet when you look at the ledger, it doesn't show, what do you do about this discrepancy?
So if KRA writes to you, the first thing I would say is kindly do not ignore that communication from KRA. So there are very many instances in which I'm for various reasons, someone will receive a notification from KRA and I will go and check, have they reflected it in the ledger or not? It's not in the ledger, I'm going to keep quiet. So that might be what I was referring to as an assessment. So the commissioner has issued an assessment, and if you do not agree with that assessment, kindly object. You have 30 days to object. So kindly object to that assessment, whether or not it appears in your ledger, because the next step may very well be to amend the return. If it is an income tax return, they may very well amend the return to reflect the assessment that has been issued. So what is so important, I think, is that, and the fear may come from the fact that maybe I'm not keeping records that I believe I can present and can be credible. So keep very good records, especially records with regard to expenses, and the keeping of a schedule. As long as you are keeping that schedule consistently and on a periodic basis, you will find you have an up-to-date schedule, and you are able perhaps to demonstrate, you're able to demonstrate that I actually did incur this amount. So that is important. It is important, first, to not ignore it if you're not in agreement. Second, to object. And then third, to produce documentation that proves that your actual income is contrary to the amount that was stated in that assessment. So that is very important.
Thank you very much. I'm really constrained for time. I'm trying to entertain as many questions as possible. From the program, you can see we were supposed to actually have ended at 8:30, but I think I've deliberately indulged people. I'll give 2 last questions to be answered, then I'll hand over so that we can go to the next part of the program. But like you can see, we must keep on engaging in more of this because there's a lot of interest and there's a lot of information that needs to be shared. So the question that is here, how will you handle double taxation? You have a group practice and you offer some services in a hospital, but the money comes through your group practice. And so your tax is levied from the group and tax is levied from the hospital. How do you handle that?
Oh, okay. I think Nixon. Yes, perfect. Nixon, please handle that.
Sorry, Daktari, I tried to unmute when you called me earlier. It was, I think there's a network challenge. So I don't think there's double taxation. What happens is if you're earning from private practice, you're earning from the hospital, or you're having a locum somewhere, what you do is to aggregate all those incomes and declare them as one at the end of the year. If any of the institutions where you either get your locum or your employer, maybe government institution or otherwise, deduct, that will be credited against your final tax. So you lump your incomes together, declare as we usually do by June, and then you are able to compute how much you are supposed to pay or how much you are supposed to be refunded, or the amount might finally even out. There's also a question I saw, and it touches on what you've said, is that if you have a secondary employment, the law requires the secondary employer to deduct 30% so that you don't take advantage of the reliefs and the allowances twice since they are given once. So the main employer will award you the relief, also give you the enhanced bands as allowances and other allowances available in relief, but the secondary employer is supposed to deduct 30% gross. If that leads to overtax, then you have an opportunity as you file your return to claim a refund for overpaid tax. Daktari, I hope I answered your question.
Thank you very much, Nixon. Now, I want to draw the attention of the participants to the email. Please go to the chat box, but I'll read it out. It's CISC@kra.go.ke if you have any further queries. CISC@kra.go.ke. As we take the last question, which is from Dr. Patrick Olang, who says, how does one get waiver of interest on previously unpaid tax, which had not been computed? Any takers?
Susan,
Yeah, I
I
can
can
go.
take that.
Yeah, okay, proceed, Nixon. That's fine.
Thank you. Daktari, there are two ways now. If you had any income between you can get what we call voluntary tax disclosure, but you'll get 50% waiver of penalties and interest once you disclose the income that you did not disclose during that period. For any other interest and penalties, you'll have to do an application on iTax to the commissioner and justify why you feel that you should be granted relief of penalties and interest. And so there are various reasons as to why you did not file. And basically the commissioner or whoever processes the waivers, we look at the strength of your reasoning. Is it that you're absent from Kenya? Is it that you were constrained by other, matters that made you not to file, not to pay the tax and all that? But in most cases, I think our commissioner and the officers are gracious enough. Just put enough of your reasons and evidence, and then you'll get a waiver. But it's not guaranteed that when you apply for waiver of penalties and interest, you get 100%. Depending on the strength of your reasons, then you can get any percentage up to 100% being waived. But again, because of the process involved, remember this is the government giving tax away. Sometimes it takes a bit long because the approval processes are there. But once you've applied, please just be patient and wait for that approval process. If the feedback is negative, you can always lodge a complaint or you can resubmit with proof and reasons, and then the commissioner will tell you why you've been granted less or more. Thank you.
Thank you very much. For the participants, there's a very smart participant here called Muragi Cyrus. He says he's a consultant in those issues, and he's put his email on the chat. Please look at the chat and you'll pick it up. Yes? Yeah. Somebody has a hand over. Yeah?
Dr. Naib, Dr. Wewe here. I think there are a lot of issues that are coming up, and I think this will call maybe for further discussions with KRA. So I think we'll be reaching out and seeing how we can address most of the concerns that are coming from the members. But maybe my comment would be if also KRA can come up with a special information package that then you can help disseminate to doctors on our membership. I think that would be really helpful, either on an e-format or something that you can also put up in our website, so that we are all properly guided. And finally, I think I'll want also to appreciate the presence of our chair.
So President, I was actually going to hand over, and thank you for reading my mind, because some of the things you said is what I was going to propose. So I was going to hand over back to Kigondu and yourself, so that you can complete the rest of the program as we agree on regular and more frequent interaction with KRA. Thank you very much.
Yeah, thank you, Dr. Naim. I think I was just making a comment on the issue. I was thinking which can be now a way of engagement. I was saying I recognize also the presence of the chair of the medical board, Dr. Ivan Jenga, who has been with us. And I hand over back then to Dr. Kigun.
So thank you. I think Dr. Diana Marion was supposed to give the thank you and the closing remarks. Thank you very much, President. I think it has been a very enlightening session. Dr. Diana Marion, kindly close for us.
Dr. I'm sorry, I apologize. This is Suzanne. Dr. If I may, I just wanted to mention quickly that KRA starting March is going to be conducting tax return filing sessions, and that if KMA wants us to hold a special session for doctors where we actually go through the practical filing of the return, then we will be happy to organize, or for you to organize with your members for such a session. Thank you. Apologies.
Okay, thank you, the panelists. I thank the KRA team for availing this session for KMA. I also thank the KMA team for making this and facilitating this so that it was possible. I want to thank all the attendees for being available. It's been a long session, but actually a very important session. And yes, we will create time to see if we can continue to have some of these sessions, because most of the time, actually, the more you know about something, the less you are likely to be found in trouble. So yes, we would like to know more. Otherwise, let me wish everyone a great evening. Thank you. Back to you, Dr. Kigondo.
Again, as I said, the presentation will be present on the Kenya Medical Association YouTube page, and we will definitely be reaching out to Susan to see whether we can have more webinars. As Susan has seen, and the whole KRA team, is that Kenya Medical Association has ability to reach out a wide range of the medical professionals. So with that, I would thank all of you for attending, and watch out for the next session, and also go to the KMA YouTube page, subscribe, and you will be seeing some of these presentations. Thank you very much.
Simon, there was a closing prayer. So perhaps you can ask the Vice President if he's still there to give us the closing prayer.
I think Dr. Njoki Fernandez, the CEO, is near a God. She can pray.
Okay, okay.
Good evening, everybody. Let us pray. We thank you, Lord Jesus, for having given us this occasion to help us learn about our taxes and how to make us responsible tax-abiding citizens. We thank you for the KRA team who have taken their time to come and be with us this evening and enlighten us about how to fulfill our tax obligations. And Lord, I thank you for all the participants who have taken time to be with us today. And I pray, Lord, that as we continue implementing our tax obligations, that you will be with us.
All right, bye to all. Thank you very much.
Have a good night, all of you. Thank you.
Thank you.